Hi guys, welcome back. I'm Roy Cuzin, partnered with Liteforex broker, giving you today a high-level trading educational session. It's going to be two parts. The first part today, the second part next Thursday, and it's going to be all about the Fibonacci trading technique. I believe an extremely important trading methodology that every trader has to dominate. But we're going to take it a step further. So I'm going to show you how I apply the Fibonacci trading technique on my trading activities. It's basically an advanced set of techniques that I'm going to show you and I'm going to teach you. So it's going to be really interesting. Ready? Let's go. Alright guys, so looking at the pound dollar, this is a daily chart, and whenever I go about to use the Fibonacci, it's always in one of two situations. Basically, there are two types of applications. One is to measure the potential correction, right? For example, take a look at what's going on right now. We have an upside trend, right? It started about a month ago, right from that point, and price was trading upside, right? It was going higher and higher and higher. At some point, about, I don't know, 2 weeks ago, price had started to come off, right? So at that point, I was actually asking the question, how low can this downside move go? Where is it going to end? Because I kind of sense that it's a downside correction. It's a move that's correcting the previous upside segment, all this move, right? So I was mostly interested in finding the bottom, the end, because that would obviously be the best spot to go back in, right? To enter, whether it's to initiate a new buy trade or to add to an existing position. In any way, it's going to be the best way to get in going long, right? Buying in this case. So we want to find out what's the capacity of the correction, in this case, downside correction. This is one type of application. A second type of application involves, the other side, basically. Here we were measuring correction with projection analysis. We try to figure out where will price continue to go in an existing trend, right? So for example, right now you can see price is moving upwards. So if I would want to know how far can it go, I would apply the second application, which is the projection analysis. So we got two applications, correction analysis and projection analysis. All right. Now today, this part, first part of our session, is going to be all about defensive mechanism, which means corrective analysis. We're gonna focus on correction analysis. The second part next week, we're gonna focus on projection analysis. Right. So you probably know, you probably know about the basic principles of the Fibonacci, right? Fibonacci correction is very well known. And the first thing you want to do when you go about with the Fibonacci trading technique is obviously pull out the actual tool. So for that, you want to go to your panel right here at the top, and you can see there's a button. You can also go in one of the bars here. You can find, actually it's right here, insert, and here you can find the Fibonacci. I always choose retracement, always, right? I actually disregard the rest. I find them to be noisy and not helpful. In any way, you actually have a button also. Take a look, this is the button. You just click this button and you got this setup right here. Now, the default, let's take a look at the default, right? So I'm going to click the default here, and this is the default. Usually presents a few levels. Since we're using just one application at this point, right, the corrective analysis application, we want to get rid of all the projection levels. So everything above 100 goes away, right? Straight from the get-go, whenever you're using the application of correction analysis, you want to get rid of the higher numbers. So 100, 161.8, 2618, 423. I'm deleting all of them. right? I'm also getting rid of this 0, okay? Now, I'm basically adjusting a little bit here, the setup. I'm going to show you the way I go about the Fibonacci, and this is being done after pretty much 15 years of trial and error, focusing on the Fibonacci trading technique. So I actually find one particular level to be the most important one, and that's the last one. This is the last level of correction by definition. It's funny, but it actually doesn't appear in the default, so we have to add it up manually. So I would just click add, and then I click 0.764, right? 0.764, which is by description known as 76.4, right? So I just add that level, and I click confirm, and then you can see that I have 5 levels, right? 5 different levels. The most famous one, right? The most famous one is the 61.8, which is the golden rate. But I would say here that the 76.4 is actually more important. What I usually like to do is focus on these 2 levels. But I also, I definitely use the rest of the levels as well: 23.6, 38.2, and 50. So we got 5 levels, right? Where 2 are more important than the rest. But here's what you want to do when you start analyzing any type of asset, in this case, the pound dollar. Now I'm going to show you an advanced technique to find a particularly strong key level that you can actually rely on. Because just using the basic technique in the Fibonacci is usually not enough, right? And I'm going to add you, now I'm going to share with you an extra kind of an advanced technique that will significantly improve your convictions. So, for example, right, we're looking at the pound dollar going up, and what I would like to know every time is where can I get in the best spot, right? So where price was starting to fall, and I'm talking about the last drop, I was looking at price here, and what I did immediately was this: I applied the Fibonacci correction analysis on the whole move, when exactly from the point where price began to drop, right? Began this downside correction. Now, we use this advanced technique that is called cluster. Cluster meaning 2 levels coming from 2 separate measurements. Right now, I'm going to explain that. I'm going to simplify that. No, that's for sure. But it's 2 separate levels that are perfectly or almost perfectly in line with one another. This is what we call the defensive cluster, right? Or the corrective cluster. And what it does is it pinpoints one particular level which is of great importance and has the best chance to, break the downside correction in this case, right? So what you want to do is you always want to look for 2 separate moves, right? One is the whole move. So from the very bottom to the very top, this is the whole move, right? But you can see that this particular move is actually a 3-segment move. Take a look. First segment, second segment, third segment, right? So this 3rd segment move, it's actually one move. That's how we can see it as one move. So I apply the Fibonacci from the very bottom to the very top, right? Then I do a second measurement. Let's bring again the Fibonacci. This time we will give it a different color, say blue, right? And you're going to do the same measurement, this time only on the last segment, right? So we have 3 segments here. This time what I'll do is I'll apply the same measurement. These are the same levels, but only on this 3rd segment, the last segment. Now here, what I would like to find is levels that coincidentally fall exactly one on top of the other. And then I would like to see if price have a reaction to that level. If it does, I know with high probability that I found the low. I found the lowest low, the very last, last move of the downside correction, and price is about to reverse. That's the meaning. Okay, and here you can actually see there are two levels that fall exactly one on top of the other. Let me show you. You know what? Let's close in a little bit. All right, so take a look. We got, sorry, that's actually upside down. So take a look. On the blue measurement, right, you can see the 61.8, you can see the 76.4. When I lay it, here are the level. Take a look. I'm going to bring here this green dotted line. I'm going to show you here. You got the 61.8 of the blue measurement, right? Check it out. Combined with the 50 of the black measurement, falling almost precisely one on top of the other. So, I immediately mark this level. Now you can also see that there is a second cluster, right? This is what we call, again, a defensive cluster, because on the next part, right, next week, on the second part, I'm going to talk about the projection cluster. But right now, we're focusing on the defensive cluster, which is really powerful if you apply this correctly. So you can see there is a second cluster, right? This time, it's the 76.4 of the blue measurement versus the 61.8 of the black one, right? So I'm going to take a second green dotted line here, and I'm going to place it exactly over that cluster. Now, at this point, I can take off my Fibonacci tool, or tools, should I say. And what I like to do at that point, I like to wait for price. So when I see price begin to come off, I imagine, right, I assume that there's going to be a downside correction. And what I do is I immediately apply these two measurements. Now, it's not always easy to do. Sometimes you don't have a 3-segment move, and in which case you can't use that technique, which is fine, no problem, right? You're using this technique only where it's applicable. We never force trading techniques on the chart, right? So I like to wait for price to start to come down, and I'm already prepared with these two levels in place. And now I just wait. I wait to see if there's going to be a reaction. Now, bear in mind, if you're working with a daily chart, like I usually do, right? I'm a swing trader, position trader. I usually use the daily chart. But you might use the 1-hour chart. In any case, whatever chart you're using, you always want to go up one scale to filter out noise, right? This is very important. So and I'm going to give you an example of what actually happened. I was actually involved in this particular position, in this particular technical picture. So I was waiting for price to come off, right? It was coming down, and I was waiting with my clusters here, right? I had the first cluster at 29.78 and the second cluster at 29.05, a little bit lower. But I noticed at first, and this is daily chart, like I said, it could be a bit noisy, which is why I go and filter it out with the weekly chart, right? So I saw that price was seemingly breaking below 29.78, right, the first cluster. But then I noticed that it came back and closed back above. At that point, this is the moment, right? This is the very moment that this whole thing became alive to me and became really interesting. Because then I immediately went to the weekly chart. Let's take a look how that looks from the weekly perspective. All right, so you can see what I'm talking about. From a weekly perspective, I saw only a spike, right? only a tail, spiking that same level, that cluster, that first defensive cluster, and bouncing off, right? Just leaving that tail here. So this, when I saw this, and I didn't even need it to wait till the end of the week, because a few days before the week ended, the spike was already showing, right? The spike was already appearing here. So I knew that price is reacting strongly to this, to the first defensive cluster that I found here, right? The 29.78. So I went back to the daily chart and I established a bullish position. Very simple, right? I just opened a bullish position right after I noticed that price was starting to turn around and leaving just a spike on the weekly bar. So I knew that this level is going to hold, and that's exactly what happened. So this is one very important way to use an advanced Fibonacci trading technique to find the end of a downside correction. Let's take a look at another example, right? Now, here we got the dollar versus the Japanese yen, and in this case, I'm going to show you, like we did with the pound US dollar, I'm going to show you an event in the recent past that I was using the same trading technique, right? The same advanced trading technique, the defensive cluster technique. And then I'm going to show you how I'm using that same technique right now. So I'm going to give you extra value, right? Because I'm going to give you a window to the future and a little bit of my insights with connection, direct connection to this very specific trading technique, and obviously my conviction on the dollar versus Japanese yen here. So you can see all across your daily chart. Let me squeeze that a little bit here. We'll put it right here on the right corner. So you can see there's an upside trend, right? Very obvious, an upside trend. I'm going to close out a little bit so you can see that there's the full trend is all across our daily chart here, right? From the very beginning to the very top. And so yeah, let's adjust our setup here. Actually, don't need to adjust it. I just bring it back, and this is it, right? So we're looking at the blue measurement in this case. Now, I was mostly interested about a month ago in this particular downside move because I thought that it's a downside correction like the previous one. And I asked myself, where should this downside correction end so I can get in with a new bullish position, taking the dollar versus Japanese yen upwards? Because it's an upside trend, obviously. So, and I noticed that price was starting to come off. We're talking about roughly, this was roughly by the end of July 2018. And price was starting to come off right here at this point. So I immediately took the Fibonacci corrective tool and I applied the same technique I just showed you, right? So what I did, I took the whole move from the very beginning to the very top, right? And then I took a second measurement. I gave it a different color. And I applied it to the last segment, like I told you just a couple of minutes ago, right? The last segment was this one. And I always do that. Whenever I see a correction, in this case it's a downside correction, but it could easily be an upside correction, right? It could be the other way around. But whenever I see this type of counter trend movement, I apply this technique. So I was, placing these two measurements, right? We got the black measurement, we got the blue measurement, and what I found was two defensive clusters. Let's take a look. First was this one. Take a look, 38.2, right? The 38.2 of the black measurement pretty nicely combined with the 23.6 of the blue measurement. You see? This is the first corrective cluster. So I've marked it down. And then I saw a second one. Take a look. 61.8 of the black one really nicely combined with the, let's take a look, that's the 38.2 of the blue measurement, right? So I marked that level too, right? Now they don't have to be perfect; they can be nearly perfect. So they don't have to fall exactly one on top of the other, but they have to be very, very close. If they fall one on top of the other precisely, that's even better. But all I require is these two levels to be extremely close to one another, right? That should be enough. And I also should mention that if you have two measurements, you have two levels, right? In this case, we have two clusters. I always trust the second cluster much more than the first one, right? Meaning, and if we're talking about a downside correction, like in this case, I will always trust the lower cluster than the upper one, right? Because the lower one represents the full capacity of a downside correction. And when you when you rely on the first cluster, and that's in case you have two. If you have one, no problem. But if you have two, I would always trust the second one more. The lower one in this case. And price began to go downwards, but it actually didn't show any sign of breaking the downside momentum, right? So, you know what, let's take out the measurements themselves so we can see just the clusters, right? These two green dotted lines. So price, like I said, whenever price begins to drop, I wait with my clusters, in this case defensive clusters, and I want to see reaction like we saw earlier on the pound dollar. In this case, I saw no reaction. In fact, price seemed to be easily breaking below that cluster. So I said to myself, you know, that's fine, very well, actually expected even. And I knew that the second cluster is the one that I should expect to break the downside momentum, to completely end the downside correction. And I was waiting patiently till I saw price reach that level and then slightly touching base. Take a look. This is really nice. Referring to this particular spike right here, right? So price showing us, right, evidently showing us that it is unable to break through because it actually was trading below that level, but it was unable to close below that level. And just to remind you, the close of the day is very significant. This is the actual balance of power between buyers and sellers. It's like the equilibrium of price, agreement between bulls and bears. And the fact that it was trading below that level but came back to close above, leaving just that spike here, suggests that the cluster here, right, this defensive second cluster is the one, is the real one, is the one to break the downside correction. And I was waiting one more day because I wanted to see price begins to break away from the level. If you want to be, risky, if you want to take higher risk, you can actually place just a limit order, right, to pick up price right there on the spot. I usually like to take a little more cautious approach, where I want to see price not only touching base and spiking my cluster, but also beginning to reverse, visibly beginning to turn around and break away, right, break off. And that's what happened. So I took massive action at that point. And it was easy because it's an upside trend, right? So we've just nailed the very tip, the very edge of a local downside correction. It's easy to take a move from this point straight to the previous high, right? To say the least, really. To say the minimum you can aim for is the previous high. Now, like I said before, in the next part, next week, I'm going to show you how to take a second application, right? The projection analysis. I'm going to show you where to aim for not only the previous high, but higher than the previous high, because usually price takes the previous high and continue much, much further. So I'm going to show you how to find these really magical points for exit, which are going to be an offensive cluster. You probably guessed it, right? We just talked about a defensive cluster or a corrective cluster. Next part, the next session next week, I'm going to show you how to apply a projection cluster and find really good price targets, basically points for exits. Now, I also said, at the beginning of demonstrating here on the dollar versus Japanese yen, I said that I'm going to leave you with some really good value, some real value, when I'm going to analyze a present situation right now, applying that same very technique. Let's see how that looks like, right? Because we can see there's an upside trend, right? It's still an upside trend, no doubt. I mean, it could reverse at any time. Don't get me wrong. There could be this downside move that you see now. This is present time, right? This could be the beginning of a downside trend. This may not be just a downside correction. That actually may end up as a full-fledged downside trend, right? So I don't know that yet. But what I can do is apply the same technique, because even if I fail, just imagine, take a look, at this particular move, right? I've managed to pick up price from this point. Now, if I was wrong, I would have lost a little bit. I would have lost a small portion of my capital, because the move, as you can see, if I notice that price was just closing below 110 here, right? This is the cluster, effectively 110. If I was seeing price closing below that level, I would just close the position, right? So I would probably take a small loss. On the other hand, when I'm right, I'm taking probably 10 times the profit that I'm taking when I'm losing. You see what I mean? So it is a very strong, solid technical trading technique. It not only provides a predictive element here, but it also provides a solid money management system in place. It gives you a very attractive risk to reward ratio or risk to reward picture. So now I want to talk about what's going on right now. So I'm going to take off these clusters, right? And I'm going to apply the present application of the defensive cluster. So I'm going to take, again, the Fibonacci. This time, I'm going to, well, like we did before, I'm still going to have a measurement of the whole move, right? That's always the first thing you want to do. You want to measure the whole move from the very bottom to the very top. Then, and this is where it becomes present time, I'm going to take the same measurement. Obviously, I want to give it a different color. So let's quickly do that. And I'm going to apply this to the last segment, right? As I've showed you a couple of times before. Now, take a look at this. This is really explosive stuff, guys. This is right now in real time, live, right? Here's the cluster. There's only one. Pretty obvious. Let's take a look. The blue system here, we're talking about the level of 50%, right? 50. And it falls amazingly accurate on top of, let's see what that level is. I'm talking about the black system now. It is the 23.6. See? 23.6 beautifully combined with the 50. Let's mark that level, that cluster. Right here, defensive cluster, and we can take off the measurements. Now, there you go. So, will you be surprised to see the dollar-yen ends the downside correction at this point? I'm definitely not going to be surprised. Not going to be surprised at all. It actually happens right now as we speak. Take a look. price was actually already trading below that level. The lowest low, and we're talking about today. This is not, a week ago. It's not a month ago. This is today. The lowest low here is 111.97, right? The level itself is 112.20. So price was trading already about 25 pip below, and right now you can see what's happening. There's a spike here starting to form. Now, like I said, I have no idea what's going to happen here. It's not 100% bulletproof. Nothing is, right? It's not 100%, defensive cluster not always break the downside momentum, but they do it more often than any other level all by itself, right? So there are two levels, so it's double the power, so to speak. Think about it that way. And here I just showed you in real time a defensive cluster forming here on the dollar versus the Japanese yen after a downside move, which might be a downside correction. Now what I want to see at this point is the end of the day. I want to make sure price made it, right? Price had managed to close above that level. Then I might actually initiate the first trade in my next bullish campaign. So when I say bullish campaign, I usually build up a position. I don't just open a trade and forget about it. I open one trade, and if it goes my way, I add another portion, and if it continues to go my way, I add yet another portion, and I build up the position until I hit my exit, my target. So this is probably what I'm going to do. I'm going to make sure price close above that particular defensive cluster, right? The level of 112.19 or 0.20. And if it does, I'm going to initiate the first small portion in my bullish position. And then I'm going to wait for the next day to show signs of resilience, meaning show signs of reversal, breaking away from that level. I want to see a green bar starting to basically break off that particular defensive cluster. That's going to be a very powerful indication, and at that point I will immediately increase my position, right? And of course, as price continues to move further away from that defensive cluster and build up positive momentum, I will begin to prepare to get out. Then I will switch and move to the second application, which is the projection analysis, right? I would look for projection cluster, not just a projection level. Just as I haven't looked just for a correction level. I was looking for two different correction levels that are perfectly in line. So we're going to do the same with the projection just as well. It's going to be really fascinating stuff. I hope you enjoyed this session. Hopefully we'll see what happens with this particular analysis on the dollar versus Japanese yen, but it's going to be interesting to see how this one is going to unfold. But yeah, there you go. Advanced Fibonacci trading technique. We're starting with a defensive cluster. Make sure not to miss the next session on this particular subject. High value training educational session with the second part, Fibonacci projection analysis. Alright guys, don't forget to subscribe to our channel and join in and follow our leads. We're doing really, really well. You probably want to be part of it. So yeah, go ahead, have a great trading day. We'll see you in the next session. Bye bye.